Hello and welcome to another update video about Dogecoin. Today we've got the Fed interest rate decision. A lot of people are waiting for it. Markets a little bit, not doing too much today. A little bit of a sell-off here just now. Yeah, we see a few red candles. There's the two things here to say about this chart. First of all, in general, I would still like to see this chart actually in the yellow box. That would be sort of a target for completing this overall wave 2, which would eventually end the bear market. And if we follow the yellow count, and I'm going to highlight that for you in a minute, I'm still looking for a lower low. That would be my personal preference. As we all know, the market doesn't really care about my preference, but the point is that from experience I can tell you that to bottom like this, and to end the bear market low like that, it would be an unusual one, and that is why I'm still here focused on the downside. But we're also going to talk about a possible bullish case in this scenario, something that I've been talking about in recent weeks, time and time again, just that you're prepared for different scenarios. And also we have a possible trade setup here at the moment for Doge, should it come down a little bit further. We're going to talk about that. First of all, this scenario still suggests that a wave 3 bottomed here in June. We moved up in an ABC in a wave 4, and we're coming down in an ending diagonal 1, 2, 3, 4, 5, ideally into this box here. Doesn't need to go down to 2 cents, absolutely not, but it would be nice to have a low eventually below 5 cents. That would still be my preference, just because the structure doesn't convince me. However, we all know that if the dog has a good day and finds its running legs, it can just start to rally out of the blue. And of course, there is also a bullish alternative structure here, which would allow for a direct breakout. This structure would allow here for a wave 1, a wave 2, another 1, 2 setup, that we bottomed eventually here, on the 15th of June, that the bear market ended here, and we have a 1-2-1-2 setup. Now the problem is this looks very much like a 3-wave structure, so I'm not convinced by it. And also in the here having this as an ABC is just extremely unusual, especially as the C wave would be too short. But okay, technically possible, nothing really invalid about this count. The other alternative would be to consider that we had a so-called truncated low, to say that I would actually prefer that we say we had an ABC here, yes, and we came down and basically this wave 5 ended above the wave 3, which happens in exceptional circumstances. However, then the problem is normally you can only justify it if the low here on the 30th of December, if that would have been followed by really impulsive price action. As we can all see and as we know, that wasn't really the case. There wasn't really any impulsive price action afterwards. In fact, I do consider this actually as a leading diagonal if we want to count it bullish. So we've got the idea. So let me talk first through the short-term bearish case. That would indicate that we came down in a wave 1, bottomed here around 7.1 cent. On the 23rd of November or 22nd, we moved up in a wave 2. We're now in this wave 3. The wave 3 is an A, B, C structure because it is an ending diagonal, right? Part of an ending diagonal. So we have A, B, C in each subwave, which means the most recent price action here is actually the wave 3, A wave down, B wave up, C wave down, which means we could now at any moment start the C wave, maybe triggered by today's data that will come out. It's a bit too early to say that. This means we had here an ABC, and in this C wave we have 5 waves, which would all add up. Okay, now I'm watching. Are we going to come down whenever we break through this trend line to the downside? I think this move down has started. And then we need to be watching, is it the C wave, which should be quite an impulsive sell-off, or do we get a wave 2? Of course, we don't know that. There are 2 different counts. the bullish count would obviously suggest that we bottomed here on the 30th of December, that this is a so-called wave 1. The wave count in white is the so-called bullish count, the direct breakout, wave 1 to the upside instead of a wave C. And if we come down and hold a wave 2 support level, then this could lead to a breakout, and it's of course tradable. If you ask now, right, you've got two scenarios, up or down, what is it? Nobody knows, but the idea here is to highlight that I don't have too much confidence in the bullish count. However, as I mentioned many times before, it's not wise to trade only the primary expectation, because we have numerous examples where alternative counts and unlikely counts in the end work out. Therefore, it makes sense to trade the pivot points, the decision points. For example, this is a long trade area, only relevant really in the bullish count. However, when you enter here, you would be at, let's call it low risk, because first of all, you can set the stop loss below the box, wherever you like. I mean, that's an individual decision, but you basically can buy quite close to a likely stop because this support area is defined based on Fibonacci levels. I have to adjust it now, by the way, because the market moved a bit higher recently. And I think we could have a confirmed top in place. It's still a bit too early to say really, but going below the 78.6 Fib level here at 7.26 cents would basically make such a bullish count very unlikely. It could still work out, but it would be very unlikely. And below 7.26, I would focus much more on the bearish count. Therefore, the stop loss can be set quite tight. I would still leave a bit of space, but not set it too tight. But a wave 3 could then be traded, and here's just the reward to risk ratio really good. If, however, we are in the actual yellow count, in the bearish count, also there, I would still expect some sort of a reaction of this area. Maybe not a bullish one, but maybe just a corrective rally. And then you can just move your stop loss into break even as soon as you see the price leave the area. So this is a tradable area, okay? And then we need to see, the market will tell us if it holds the wave 2, if we can expect further upside or not. Yeah, and that's my update about Dogecoin. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.